Welcome to this week's version of Market Bites, BBRE. We're happy to have a couple of guests with us today, and we're going to talk about a fairly complicated subject. And it's so complicated that I can almost not introduce it. But we want to talk about condominiums in our area that are conforming and non-conforming. And first, I want to introduce to Matt Mathosian and Tyler Ausherman. Okay, thank you, Tyler.
You're welcome.
I can't pronounce it, but anyway, but thank you. Who are with Alpha Mortgage, and we've asked them to sit in and help us explain what's going on down here, why this is important, and what it means, and also how they handle it, because they can handle it. That's the important thing.
Yes.
So let me turn it over to y'all. One of you tell us a little bit about why these things are non-warrantable and what that really means.
Yeah, I think we'll start with just like what does the word warrantable mean? You know, it basically means that Fannie Mae, Freddie Mac, or FHA, HUD, VA, you know, that they will guarantee a mortgage based on that particular condominium. That makes it warrantable. You know.
Okay.
So, you know, that we can when we underwrite a condo, that it meets that we are able to meet the reps and warrants that Fannie Mae and Freddie Mac require to make it eligible. So sometimes condos fall in and out of these layers of being warrantable due to a lot of different things. It could be that there is a high investor concentration. It could be a condo-tel where there are short-term rentals involved in the property. It could be a shortage in the budget. It could have something to do with low coverage in the insurance. It could be a lawsuit. There's a whole lot of different reasons that a condo could fall out of being warrantable, you know, fall out of that eligibility. And so that's an interesting thing to kind of consider, is that condominiums will, throughout the life of that condo, fall in and out of warrantable. So it might be warrantable today, but a lawsuit could make it tomorrow not warrantable. The property passes all the property inspections today, but maybe tomorrow we establish that there are some structural issues with the condo. It is no longer warrantable. So lawsuits, things of that nature. A couple of properties flip from owner-occupied. Now we have a high concentration of investors. It's no longer warrantable. So what we do is when we're considering approving a condominium, what we do is we send out what's called a condo questionnaire. And so that questionnaire will typically go to that condo association or the management company, and they're going to fill that out, and there's going to be a bunch of questions on it, and it's going to hit all of these different topics. And so what we do is we take that questionnaire and we'll run it by one of our underwriters to determine if it is a warrantable condo. Now, depending on what it is, we have options outside of Fannie Mae and Freddie Mac where we can take this condo questionnaire that may not be warrantable at Fannie and Freddie, but we have other investors that may decide, you know what, that is a level of risk that we are willing to accept. So examples of that might be a high investor concentration. Maybe the condo has 50 or 75% investors. Well, that might be okay with a lot of our non-warrantable investors. Condo-tels, we have some investors where a condo-tel isn't even really a particular type of a loan. It's just a product that they accept, and we can do all different types of bank statement loans, DSCR, or fully documented income. So we have so many different options available, but I think the moral of the story is just because it's not warrantable doesn't mean that we can't lend on it.
Yeah, and I know one of the things that we talked about earlier, and I think Tyler, you would hit upon this, and that is if it does come up and it's a structural issue.
Yeah, if it's a structural issue, I mean, might not have a lot of avenues for that, but we can certainly take a look at it. I mean, I know certain complexes update insurance policies, not enough coverage. Sometimes that can impact it. We can take a look at that as well, and try to, with the insurance, we can always try to upload some documents and try to get it turned around, and so we can kind of move that one along. But structural is something that you definitely want to look at when you're pursuing one of these ventures.
Yeah.
And I mean, if we have a customer for a condominium, what do we do? Call you?
I mean, basically, yeah. I mean, because once you get it over to us, we can determine what avenue we need to take with it, whether it needs to be, if it's something we can do by agency guidelines, or we have to turn it over to a non-QM product to try to move it along, or a non-warrantable product.
And that generally is going to mean if folks have to go that avenue, the interest rate's probably going to be somewhat higher, correct?
It is a little bit higher, but it's not as bad as what you might think.
Okay.
So
That's good to know, because I know sometimes when people hear that, they think, oh my gosh, I'm going to have to pay double-digit interest rates on something like that. So
It might be a half a point higher,
yeah.
a point higher, a point and a half. It just depends on the product and what they're trying to qualify for.
Okay.
Mhm.
And I mean, but y'all are real helpful. I mean, you have been in the past
Thank
on
you.
this issue, and I think that's important for us, and for our buyers and our sellers to know that we have a resource like you guys that we can go to quickly, find out the situation, get the best solution that's possible, and hopefully get the only word we want, which is yes.
I think the
We
key,
like that word.
the key for us is just if it's not a warrantable condo, it's what makes it non-warrantable, and then we can take that and we can escalate it and get pretty quick answers on it.
So it's not a blanket no. It's just a little bit more of a. It's just a process you got to go through to see what can be done. And you guys, I know, are really good at that. I mean, that's one of the reasons we really like working with you guys. Is the answer? It may be yes, but it could have a but in it.
Well,
And that's okay. As long as we know what it is and have time to work through it.
yeah.
So,
And also, again, now for being local, we always encourage our folks to use local lenders, just because
it
we
makes
have
a
experience.
huge difference.
Huge.
So anyway, thank y'all for coming and talking with us. And they are constantly updating us on what's going on in the market, updating us on interest rates and on various promotions that they have. They have some really good promotions both for buyers and sellers that we're going to take advantage of. We learned about those today. So anyway, thank everybody for watching. We'll be here next week.